Hi Kerry, how are you?
Hey Olga, I am great. How are you?
I'm good. Thank you so much for joining us today.
Absolute pleasure. Absolute
Um,
pleasure.
I thought today for something different, a little bit different, we'd focus on debt, but also solutions. And you've got a really interesting business, and I'm really focused on solutions and how we can help people to alleviate some of the stress that's going on in the world at the moment. Did you want to tell us a bit about your business, and what you do day to day and how you help people?
Sure, I'd love to. So I've been in the industry for 24 years, which definitely helps me with my business
Yep.
because I can offer so much sort of guidance and assistance. And I guess along sort of being 24 years in the finance industry, I've worked for specialist lenders, I've worked for all different sort of types of lenders and also worked in the bank myself. So I've seen a lot of things, and Credit Success was open in 2022, and the reason for that is one, to provide a lot of credit reporting education, because there is such a lack of awareness of credit reporting education in terms of that you actually can access your own reports every 3 months. You can actually look at your score. And then we also provide credit repair, so we can get that score up, ready to sort of return to the brokers. So that's a little bit about how the business works, and what we do to support and help people get back on track. Because normally it's a life event, it's occurred, or they've got, as sort of as you started with, it's something to do with like maybe childhood sort of things, like we weren't taught sort of how to manage debts correctly. And we get into those bad patterns, and also that education that we can get ourselves in that little bit of that, hurt.
Yeah, absolutely. And one of the things we see, which is new-ish, it's been around nearly for 2 years. The ATO brought in this legislation that if people have over 100,000 of debt that's more than 90 days overdue, it can be reported to a credit reporting agency. So one of the things that we see a lot, and I'm not sure if it's your experience as well, is people only know that they've been reported. Sometimes they read their mail, sometimes they don't. But when a creditor stops the supply of goods, I had one particular client that rang up in a complete tiz because all their fuel cards had been cancelled. They were a transport company. The ATO had reported them to the credit reporting agency, and all their fuel cards stopped overnight. So it's really interesting to hear that you can get your own reports. Do you find that people do keep track, or it's more if something happens and there's a consequence that you get contacted and then have to jump in?
It's normally once it happens. So they've normally
Yeah,
gone to
yeah,
their finance broker or their bank, ready to purchase a car, or buy their first home, unfortunately, which is the
yeah,
most
yeah.
sad. And then the broker will run that credit report, and then the broker will say, hey, look, I'm so sorry, there's a default or there's a late payment. So with comprehensive credit reporting, that only came in a few years ago. So the credit reporting system is really evolving over time as well. So now, and there's no sort of awareness on the media to say, hey, all your debts that are regulated, they're actually going to be reported. Like, the repayment history is going to be reported now for 24 months. So clients go through, and it's always when they've gone through, sickness in the family, or a divorce, or a business failure. There's always an event that occurs, because it's not your priority, right? If your mum or your child is sick, you're not going to be, you just, you've got to quit your job and you've got to look after them, for example. And then the broker runs that report, and they haven't realized that they've got 6 months of late payments on their credit report. And then,
Yep. So we see the same with tax debt.
mm,
So 9 times out of 10, there is an event, something bad has happened, and
mhm.
that's why people have got into debt. So if someone came to you, and they did have something on their credit report that was stopping them getting a home loan, what's an example of how you can assist with that to get that lend through?
Yeah, let's go for the example of a customer. Her mum was sick, she quit her job, and then now she's come to me because she's got, I think it was 6 months repayment history of late payments. We can look at bank errors from the bank side, and also compassionate grounds. The best thing the client can do is that they've communicated with the bank as well, or maybe potentially gone into financial hardship. Financial hardship still affects the credit score, but not so badly as a late payment does. We can't really fix the FHI, but it doesn't affect the credit score so much. But with those late payments, for example, we can go to the bank, look at errors that they have made in the legislation, in particular defaults. We see a lot of errors in the legislation. Let's say it's a utility, a Telstra bill, for example, or any phone provider, something like that. There's proper protocol that they're supposed to go before they bang on that default within 60 days, which I guess you would be very familiar with in the ATO system. They would have to have a strong sort of protocol, right, before they...
So with effective engagement, it's whether they're in a payment plan, whether they've lodged an objection, or whether they're appealing a decision. Now, all of those things are enough to stop credit reporting. And then the other unique thing with the ATO is once we've got them in a payment plan, 7 days after the first payment of the payment plan is made, that credit reporting disappears. So I believe that that's quite different to some of the ones that you would be seeing. So the payment plan fixes it and then it comes off. So like the example with the fuel card, they would be reinstated and there isn't the same historical legacy, so to speak. Whereas I understand with some of the ones you're dealing with, there is still the historical legacy. Is that right?
Correct. So we need to find bank errors or compassionate grounds. And when I speak compassionate grounds, we do need evidence, especially for the late payments. They actually are a little bit harder than the defaults and court judgments, but we have to get like an affidavit written up. We need to get some documents and things like that, like health records or things like that, to confirm what they've been through, and also look at the communication that was between the bank, the creditor, and the client themselves. So yeah, it's not just an instant thing. We have to compile a case and have grounds as such to be able to get these removed.
I think the other thing that was I picked up on that as well, which I mentioned at the beginning. I talk about eat the frog a lot, which is a bit of a euphemism for you've got to do the thing you don't want to do. But exactly what you're talking about, exactly what I'm talking about, when people can face what they don't want to do. So for you, it is talking to the bank. For us, it's dealing with the ATO. And we see so many clients that have put their head in the sand. Whereas if that they had dealt with it earlier, and again, in the instances you're talking about, if they had talked to the bank earlier or had talked to other credit providers earlier and told them what was happening, then it is much easier to deal with. So I'm guessing you come in similar situations to where we come in, that clients are so stressed, don't quite know what to do, and are then desperate for a specialist to be a bit like a shield between them and the entity they're not scared of, but really sort of nervous talking to.
Yeah, we're ASIC licensed and we know those grounds and we compile that case. Whereas when the client themselves will go to the creditor will potentially just say no or mark the default as paid, and which doesn't really make a difference for finance. So we use that legislation to remove. But the other big thing, as sort of you were referring back to, is that education piece that clients also don't realize that every time you go for any type of finance, even if it's a buy now pay later account or it's a $2,000 cash converter account or any sort of small short-term loan, that still affects your credit score by around 50 to 150 points. And we've only got 1,200 points every 5 years, which is crazy. And we need around a 650 for finance, roughly. So we've only really got 650 points to protect every 5 years. And now the credit reporting system has evolved so much. That 650 also depends on if you're paying your bills on time and what you've applied for. So realistically, you've only got room for a car loan and a home loan potentially and a small credit card every 5 years for that scoring system. So what I see a lot is that clients, and again, there's no awareness, and that's why that we do these things like the podcast. I've got that ebook, so we can explain that these little buy now pay later schemes and these little loans, like the little $5,000 loans. And also every time you shop around, like if you get declined with one and you go and you try 5 times with the same lender, that's 5 inquiries.
Are there things you can do to help fix that score and help with those points?
Yeah, we do offer a free consultation, like 20 to 30 minute consultation. So I run through that credit report and I explain what's on there and what we can fix for future. I always suggest closing those buy now pay later schemes straight away because that'll instantly lift the score by about 70 points. With the inquiries, it is changing because we are under ASIC review at the moment. but they're hard to remove because at the moment they're hard inquiries. Eventually they will go into soft inquiries, that some of the lenders will be able to do like a soft inquiry, like a pre-approval stamp. I think it's called
And that
access
won't affect the
detail.
score as much. Yeah.
Correct. It'll
And
stop
so
stamp
from
it.
your, when there is ATO debt and we're in a payment plan, it's my understanding that doesn't affect a score. So once we're in a payment plan, the ATO considers that at being in a compliant position, and it doesn't come up as a score or using any points. Is that correct?
Yes, so 'cause you're saying so as soon as the client is on a payment plan, that ATO default is removed, correct? So it would be removed. There's no, it wouldn't affect the score because it's removed. There's no evidence. There wouldn't be evidence on that credit report, which is fantastic. Like I love how we can work together with like that because I've seen like before we sort of met, I had these ATO debts and I wasn't sure myself how we were going to remove these. And again, it's such an impact for finance when you've got an ATO debt of what maybe potentially, what's your average, 100 and 200K sort of default, right, that you're seeing?
So the average debt that we're
Yeah.
seeing is probably around the $800,000 mark. So the average debts are huge now. So pre-COVID, an average debt might have been 300,000-400,000, and now it's double that, which makes sense because a lot of people deferred their debt and carried that debt over. So there's a huge amount of debt out there. But I think what this is highlighting as well is clearly there's so much behind the scenes with these points and these scores that different accountants or brokers may not necessarily have such an in-depth knowledge around what you're talking about. The same with us when we're talking about solutions to get rid of the credit reporting if it's happened in relation to ATO debt. And I often talk about using a specialist because there is so many rules and laws. And I'm assuming just like us, you work in parallel with brokers and you work in parallel with accountants. And how do you work together with other specialists as well?
I think the beauty is because I do have that experience in the finance industry. So I'll chat, normally it's with the broker and the three of us will work together and go, hey, right, for example, the credit score is 540. We need to get that credit score up to 700 for finance. How do we get up to 700? So potentially I wouldn't suggest to potentially remove everything if we don't need it for finance. So we sort of work together and work out what their future goal is and what that big goal is and try and get there. And I think that's what makes it different is because we can work together with that accountant, with that broker and work out the correct goal because I'd hate to do things that aren't going to make a difference.
Yeah, absolutely. I was talking to another accountant. We did another episode sort of like this with another accountant, and he called it an ecosystem of advisors. And I really like that term, that you do actually need a whole group of people to get to where we need to be in today's day and age, and that there are ways to solve the problem. I'm sure you see some clients, we see it all the time where people say, I didn't know you exist. I didn't know there was a solution. I didn't know that there was a fix for this. I just thought, like, I'm guessing some people would go to a third tier lender almost and not know that you could fix the score to bump them up to get a loan at a much better interest rate, for example.
Yeah, because if we can fix that credit score, they've gone from, and obviously I'm not a broker, but they've gone from potentially a 10% rate, for example, down to a 6% rate. So think on an average loan, how much interest we're going to potentially save them each year.
And so if you look at it that you're doing that, we're getting people into payment plans they can afford. It's the same when people have terrible payment plans and we're able to renegotiate and get a much longer payment plan with much smaller monthly payments. So by the time, and that's a perfect example of how we work together. If we renegotiate an arrangement, get quite small payment plans, that increases the cash flow. You're fixing the credit score on closing some files, closing some loans, fixing the score so they can then get finance from another lender. There's a lot of lenders that are happy to accept finance if the tax debt is in a payment plan, and I'm assuming the same when these scores are lower. So you sort of look at how that works together, and that can completely change a landscape from a client that might even be looking at finance. We've seen some up around 18%. If we can get that back down to sort of 8 or 9%, absolutely changing for that business and that particular client.
It's I think it's I'm not sure. I'm sure this lovely lady won't mind me sharing, but obviously I've got the podcast, and she was starting to listen to the podcast because there was I think it was her cousin came on the podcast as a broker, so she started listening to this podcast. And you were on my podcast a while ago. And her husband unfortunately died 12 months ago. And she was handed the business, but he always looked after the financials. And all of a sudden she was listening to the podcast and she saw Tax Assure come up. And she phoned me and she said, Kerry, like I have no idea how to handle my financials. I'm so stressed. I've got a huge tax debt because I don't know how to manage things. And and obviously I've reached out to you and I thought, oh my God, like that one call made me realize like how, like what we can do, because she doesn't know what to do. She'd spoken to her accountant as well,
Yeah.
and her accountant hadn't given her the advice that probably you could help her with.
I think you don't know what you don't know. And I often say I think it's in some ways really unfair in today's day and age to expect your accountant to know everything. Exactly like all the things you were going through. You do this all day, every day. I do what I do all day, every day. So when an accountant's doing tax advice and compliance and all the other things in their day, it's impossible to have the same depth of knowledge about dealing with the ATO and payment plans or credit scores or fixing or closing loans. So it's a huge passion, and it's why you do what you do. Why we're doing this is to tell the world that there is help out there, and very specialized help, and that we can all work together. That lady, that you could hear the relief in her voice, and she, like I said, she didn't know what she didn't know, and to have someone else that could take that weight off her shoulders to even just fix that bit. And she was so remarkable, the journey that she had been on, and how positive she still was about everything that she was going through. She's got a young family. She was sort of very inspiring, and it's people like that if we can help, it's a viable business. They just need very specific help to get their business back on track.